So it's gonna be a quick little scan for the week of the 18th. It's not gonna be anything crazy. Don't have too many watches. Um, Really, a lot of them are still the same as the video from Thursday or Friday, whichever the last one I made was. But a lot of my concept and thought process behind what's developing right now in the broader equity market still stands. We continue to see exhaustion this week. We obviously saw the failure at the external weekly high that we had been fading. Starting the week of the 21st and the week of the 28th, where we, saw the subsequent 3% reversal from high of Thursday to low of Friday, very, very easy, very quickly. And then we see the subsequent continuation to new highs where it's just a window of strength. It's just the first week of August. Um, it's just the first week of August, and those flows come back. We have the vol crush from a 50% move on the VIX, and things like it's just how these things work, right? We're not really going to, especially when I think that we're building out a broader equity market top for the next, you know, a, a large time being that I kind of see. Um, we're gonna have to see the auction develop. We're gonna have to see hands change. It's how these things work, and it's how they've worked for a while. But when we see the seller at the gap, we see the gap up on last Thursday's session, the 7th, and the failure. And all this price action is relatively bearish. I mean, even just look at the hourly construct or structure. Even the Tuesday rally this week was very, very, very just like this sloping upwards passive seller throughout the entirety of that session, but no aggressiveness behind that, right? And then we see the kind of range built out Wednesday, Thursday, Friday, where it's just an unappealing daily sequence, right? It's a exhaustive print. It's two inside bars that don't really give you a good structure and a reminiscence of a strong buyer. But we don't necessarily have the most notable daily candle or weekly candle quite yet, although I'm not really straight away from the short side focus of mine. It's just waiting. I said the January position. I said the September position. We have OCPEX last Friday. We have expiration this Wednesday. Ideally, it's going to open up a window where we can short this back down to the 621 to 626 spot and then down to 613. I still think before September expiration, probably before middle of early ranges of September, we revisit these highs, which is going to be about a 5% decline. But I think it's pretty possible. I think the potential is there, and I think there's a lot of things that are really going to get this going in the next week or two. You go ahead and you look at QQQ as well. This is a very, very ugly weekly candle closure on increased volume. And then you understand just the structure and the rally, the new highs off of this August 1st candle where we saw the breakdown. And then the rally where it's just very weak. It's very unstructured, and it's very notably a passive seller in a window that's waiting to be opened for a short side vulnerability. Um, and then you go ahead and you look at like the MAGS chart, right? This is a very notable kind of seller on this candle the week of the 28th, but we see the reversal the following week, the week of the 4th, and it's just very reminiscent of no true bid. But we have to be patient, right? We have to wait. We have to wait to see the structure develop, and that's why I said the September expiration and the January expiration is completely valid here. XLP obviously down 0.5% this week. Not surprised after the 3% rally we had the week prior. This still looks very clean, and I would like, a change in character on a daily perspective on this name to be put in, and that'll be a very, very good sign for the risk-off names. This looks like a very, very constructive chart, very compressed, notably underperforming, the tech sector and whatnot. And if this can put in a higher low, defending, the really clean, like 4% rally that we had put in here, I think this will blast through 83 all the way to 84 to 85. Right, we have XOK. This is a very gross weekly candle closure, fading the highs from the week of the 28th on some notable volume and the anomaly pouring in there. We see the kind of exhaustion show its hand, and this is just a very weak chart where we rally off of new high or on the new highs and don't really put in a super, super clean structure. It's just how these things work, right? We have a 3% rally, but this is not going to be, you can't justify getting super aggressive saying that this is the top. because it's an auction. There's unsold orders up here. There's a window that's opening up following this reversal that has flows under the hood that hold a lot of relevance to where the market moves. And that's just something you have to pay attention to. Right, the semiconductor space, this is a very, very notable distribution in my opinion, and this is a top focus going forward. Right, we have the rally to new highs, and then what we see here is essentially above these July highs is a daily distribution playing out, and I think we have potentially put in our third higher high here. Right, we have the breakout, we have the stall. This is kind of our preliminary signs and our first sign of an exhausted buyer on new highs with this fadeable gap up on a little bit of volume. We put in the higher low on the 16th. This is now our second subsequent daily test off of the previous highs from July. A lower high attempt. We put in another bid here on this kind of capitulation print rally. Another sign of exhaustion put in on this candle. Breakdown. We established a new low, which is a good sign of weakness from our potential UT. A lot of volume backing this. We rally again. We see the continued exhaustion. Look at the volume put in on this Wednesday's print. Now, 283 is kind of the line in the sand, right? That's why I kind of have this here, right? If we can develop what is a clean move from a third high sold off, maybe a fourth, depending on what happens, and then a weak subsequent like volume bearish divergence, I guess is what you would call it. Just like the like harmonic volume as far as the short side trade goes, right? Like a buyer off of 283, a very weak pop on no true bid, signaling that the path of least resistance is established. We put in that change in character at like discount or within a gap fill. I think this shreds through 283 down to 270 to 260s. This is a notable daily distribution. A lot of these semiconductors look very gross overall. You have TSM just building out this range following the report with a very aggressive seller up here. You have Marvell, looks kind of shitty as well. AVGO at new highs, but I still don't have much of an interest in this chart at all. INTC is a kind of an anomaly. This doesn't look terrible. MU and Lam Research completing, in my opinion, that accumulation, right where we fill these gaps. I mean, this could still push to 140, but this is a pretty ugly weekly candle closure following the climaxes built out throughout this entire attempt at a higher low. Nvidia looks like absolute shit. Right, we put in that weekly wick on the 28th, and then we're still subsequently failing that 183 range where there's a 7% decline in 2 trading sessions. Yeah, and AMD looks really bad as well. This is that kind of hanging man print, and then we get the break through the earnings gap, and then the kind of exhaustive gap up on Wednesday's session where we see the reversal as well. A lot of these semiconductors names don't look good at all. And it's a really big tell for the equity market when a sector that's been leading for this long is looking this abysmal. And it's the same on SOXX, but I think SMH is just more of a name that I like to watch, and it's a pretty clean, notable 3 higher high distribution potentially developing a new highs right here. I mean, we look at the hourly, even just the 4 hour, right? This is very notable. Exhaustion. We see a quick decline into August where those flows kick in and we see another high sold off. This is honestly one of the top watches for me in terms of just red flags for the equity market. Right, another red flag is financials. I don't have a clear edge just yet. I said I was looking at this gap fill for what could potentially be putting in a lower high, but I don't have an edge quite yet here. I think this is too deep to be a lower high, but too early to speculate on this change in character. I think if anything, 5132 being absorbed would set up a move to the gap fill. I don't mind us developing something like we did in Q1 where we had this floor at 5075. And then we broke down and sold off through it. And this broke down 10%, and then another 20, another 17. But this is a bad looking chart on a daily and a weekly perspective. A lot of the individual constituents within this sector look terrible. But I don't really have such a clear tradable edge quite yet. But when you look at the higher time frame perspective, I mean, we saw signs of distribution in Q2 of 2024 on JPM. That's when Jamie Dimon said that he wasn't going to buy back any stock. And that's when I think the distribution began. But these things take a lot of time. And we see a really clean leg in April and then the rally to new highs where we're just continuing to see these distributions built out on the majority of the financial sector. JPM at that $300 spot, seeing continued buying exhaustion at new highs, stalls. Good. I mean, you even just look at this. Look at how high volume these breakdowns are and how weak the bids are. Goldman Sachs at new highs, same kind of concept here, building out a range. Nothing that looks good about this chart, but I can't justify taking a short position on this. Schwab is one that is really gross on not only a daily time frame within this range or a weekly time frame within this range, like from last quarter four, but just a higher time frame perspective. This looks terrible. And we're seeing an aggressive like breakdown potentially starting to develop up here, right? The cracks are starting to form. And it happens after this earnings gap, and then we see the exhaustion. We see a very notable candle on Wednesday's session. But once again, there's no quite edge here just yet. I mean, you could take the breakthrough 95 to 93. I'd rather wait for something cleaner. Visa, I wouldn't be surprised if this reverts into the June 5% bear gap we had. I don't have much of an edge here quite yet. This is a big anomaly. We take out those lows. The draw may very well be into this gap, and that's not going to be a surprise to me. MasterCard has already filled that gap, which is a really big time spot to fill and then potentially fail. Where we saw the preliminary signs of a redistribution happening within this 5% gap off of the report in July. BlackRock at new highs. I mean, like I said, not good looks, but you're not really gonna get the best ads and average if you're taking like an option short up here on a lot of these names. I do think these revert, and I think they happen quickly on the majority of this sector, and I think it's a much higher time frame distribution dating back to quarter two of last year, the beginning of quarter two of last year. I think this revisits sub $40 next year, but this is something that really needs to develop first before I take a short position. But even just looking at the new highs that we put in, come on, man, this is pretty shit. Another sector I kind of want to discuss, the energy sector still looks phenomenal for a commons trade. That hasn't changed at all. This compression following the June rally, and then the late June exhaustion and breakdown. Didn't see much of a result from the effort put in by sellers, and we still have a lot of compression sitting underneath these April 3rd gaps. We're putting in like a weekly anomaly print on some volume, backing a small spread candle. No clear like hourly or daily structure for me to take an options position quite yet. Lazam is probably my favorite weekly candle, or not weekly candle, commons trade, because we're sitting at the golden pocket. We're defending a massive 7.5% candle on a weekly perspective. And we're filling this gap from June, and we're seeing the climaxes built out following the report. We're taking out these lows, and we have a clear target at 115 to 118. This is a pretty good looking chart with a pretty objective $2.50 risk for a 15 or $10 to $11 reward. And the majority of the sector looks pretty appealing for a commons position, right? Like very compressed names sitting underneath the bear gaps that we put in April. So if you understand like the relative underperformance of these names in comparison to where like SPY is at and all these other names are at, like these will revert to the gap fills. It's kind of inevitable, and I think it'll probably happen. I would hope it would happen now. If it doesn't happen, we'll probably take out these lows, right, and fill this full $72 gap, and then we'll have a trade to 94. So that would be a pretty good opportunity. If this like daily accumulation fails and we take out the lows put in April, I think it'll just set up a better trade next year. It all kind of depends on what we see with the risk on sectors right now, and if we can build out that top or not. So it's all kind of relative to what happens, but isn't everything. So that's a lot of my sector-wide breakdown. SPY QQQ, the individual sectors that I kind of see why like XLE and XLP look really good, and that's a red flag for a lot of tech names. XLF and SMH and XLK look really bad. That's a big red flag. We had a big pop on healthcare. I discussed UNH. Actually, I think it was Thursday, because right after I discussed UNH, we saw this really clean pop off Buffett news, which is honestly insane. I was big on waiting on this name. We just never got anything that was super, super clean within this range. And I knew that these things work in a way that we have to change hands, and that's what happens underneath these May lows. And we get that capitulation, we get that daily change in character, we get the rally of about 30 something percent in just a week or two. Clean, easy. Now this is still a commons trade for me, right? This is absolutely still a commons position underneath these lows, targeting 335 to 380. But as far as an options trade goes, I really want to wait on this, taking it again. If we see a clean harmonic, like higher low put in, that would be a good trade to 330s. If we see these lows taken out, that's a good opportunity to buy more commons. It depends on how this develops, in my opinion. Um, we could have this being our first low, this being our second low, this being our third, and this is the end of the three lower low accumulation, and we develop a last point of supply. That wouldn't be bad at all, right? If we put in like a higher low here, that would not be a bad trade. It depends on how we defend this gap, because a lot of late buyers definitely could get trapped off of Buffett news. A lot of people buy off of Warren Buffett buying $5 billion worth of UNH, and that'll definitely trap some people, and allow the draw to be to take out these lows and more hands to be changed and the more mature accumulation to be built out. So just something that I'm looking at overall in terms of UNH. Still a phenomenal commons focus, with really the target being 380, of my opinion. But it's one of those names and trades where you have to be a little bit patient now. You can either wait to add in, you can trim some, you can wait to take an options trade. Just take it appropriately based on what your position and your risk to reward is. We also saw LOY get beat, obliterated off of the report, but this could potentially be a reaccumulation of these new highs. We haven't seen much of a distributive structure built out. We're seeing potentially a third lower low on the highest volume we've had in 6 years off of an earnings report. This name has kind of been getting beat up lately since August. It's been an underperformer. So this is a name that um, this is a name that could develop something. It's just kind of a side watch. I don't really want to take options on this. I don't really want to take commons on this. Just something that I'm noting within healthcare. This is a big time breakdown on a weekly perspective, and then a nice reversal with volume backing it. When we have 50 million volume trade on a 12% green week and 52 trade on an 18% red week, there's probably a big time buyer off of this report and a subsequent reversal of 20ish percent or 15%. I'm stupid. But I don't really care too much. Moving into other tech names, I still think Meta is building out a distribution. We haven't seen anything that's really straying me away from that opinion. We haven't seen an opportunity to trade it at all, though. But we're, kind of potentially, we see a big breakout on Tuesday. The highs faded on Friday. Just depends on how this window into September is really, really big here, in terms of if this sell off and breakdown can get going. So it's kind of make or break here, right? In my opinion. But I think this is probably our UTAD off of this exhaustive candle on the report. You look at Microsoft, this is performing terribly following this earnings report. I still think Apple can be a sweep if we see some continuation from a seller. We haven't really seen, we see the fake out and absorption of supply off the report, the rally put in, and then this potential exhaustion developing within a still big time spot in a weekly last point supply that could be putting itself in right now. And so I'm going to be paying attention to the daily and weekly candles on this. I don't hate Tesla, but I don't really like it. I just don't like how these gap ups don't see the cleanest constructive follow through. I would watch for like a higher low put in, if as alongside potential focus on an hourly or daily perspective to push this to 360. It'd probably be it. on a side watch. And Google filled the 206 gap, clean common straight at 50% off April lows with a phenomenal amount of ads here and here and here, all the way up to this gap fill. Super clean. And then Amazon filled the gap as well. So a lot of these names are kind of completing their reversals, right? In my opinion, a lot of these names are kind of completing their reversals and reversion trades that I just think give you a lot of red flags overall. Other watches, Pep, insanely clean commons trade off the lows, cover it, summit of the report. We see the breakout off the report, and then we get not a good options trade, which kind of sucks, but that kind of capitulation into the gap and the subsequent exhaustion, and then the 10% rally that stems off that. This was phenomenal. There's a reason this is up 20% off the lows as an underperforming consumer staple. And this could push, 155 to 160 pretty soon. Phenomenal trade. I mean, absolutely phenomenal. Commons wise, hasn't set up yet for options. I'll still be waiting on that. Hood and Palantir still don't look good. This is a very ugly candle closure on Hood. I think this is building out an aggressive range following this immense amount of volume that was put in on the breakout to new highs. Palantir still looks like shit. And it's really still reminiscent. It's still very, very, very reminiscent of what happened following the report in February, where we put in this exhaustive earnings gap. We continue to trickle a little bit higher into the broader equity market top on February OPEX, or in February of expiration. And then we got cut 50% on a decline in April. We're kind of seeing that be put in, but I don't really want to trade it. PAW report Monday after hours. Not going to be surprised if this pops a little bit, breaks into this gap, or maybe stays flat. I'd be very surprised if this sold off, but this is a higher time frame short-sided trade that I think reverts to $100 and maybe even lower. We need to see something that developed first. These look like shit. Filling the earnings gap on Coin. MSTR now down like 40% from the highs put in July. 20% from these highs. I've talked about that. INTC with a really clean pop this week. Not a bad intra-week position that you could take on this little nice little 4-day pattern, pop on news on Monday, and then we rally in the earnings gap. This is an underperforming name relative to, not only since April, not only since August, but since fucking 2021. This has been a really big underperformer. And we saw the preliminary signs of accumulation put in early 2024, and then this massive sell-off that has been building out a range, and we took those lows out in April, but we haven't really yet see much of a clean structure yet. If you're on a commons position back up to 30 to 37, that's not bad, but you have to have a long-term perspective on that. But this is a clean commons trade that I would have just I would have liked to see this low taken out off of this report. Something cleaner than what I've seen so far to even bid commons on this, but as far as an objective risk, but this is a clean long on a weekly and a monthly focus, and seeing this much volume pour in, even in comparison to what we've already seen being put in July and April, this is pretty intense. And we've seen lows taken out and a campaign being built out. We haven't seen quite yet a weekly or a daily change in character. And that could potentially be put in off 2643, which are the November highs that we then faded in February. First Solar, insane 40% commons trade from this 140 to 150 range. Discussed why I like the commons. Also discussed why this is a pretty speculative name and a difficult one to trade, but it's another underperformer. Building out a ton of climaxes, finally started to build out a range in quarter one and quarter two, and then finally started to develop a daily and a weekly shift in the structure. Lyft as well. This is an interesting one. Like I said here, this could be a change in character. I would have liked probably that to stem off of the lows being taken out, but we haven't ever on this name, besides in February of 2024, seen a really clean pop and a constructive weekly higher low in the discounted range, and that's what we're kind of seeing now. A bottom feeder, obviously, following the breakdown in the May 2022 earnings report, but a really potentially mature accumulation where we just attempt to find this higher low in August. We stall within this breakdown that was, 55% decline in a couple months. And then we put in an attempt at a higher low in April and now get a clean rally off the report and then a ton of consolidation following that. This is not the worst look in the world, if I'm being completely honest, on a commons position, on a long-term commons position from like $13 to 20. But you have to understand your risk reward on that trade. This isn't going to happen in a day. Like I said, it's going to take a little bit. But I would not be surprised to see this push, especially with how this looks off of this report, push 1754 in this year, push 19 to 20 within this year. This is not the ugliest looking name as far as a commons trade, but it's also a speculative high beta growth name that tends to potentially fake a lot of people out. This could be the change in character though, and if you have a long-term commons focus of a long-term commons port of Lyft at 13, of First Solar at 140, of UNH at 220s, 230s, like that's not a bad portfolio. But you have to be willing to add and cut whenever you need to. I don't really care about else, but I mean that's pretty much it. That's pretty much it for me. I like Zom and UNH Commons. I still like a lot of these semiconductor short energy and consumers look pretty clean, and even if I'm not trading them, that's a good indicator of where I think the equity market's headed. Expiration on Wednesday. We have to get something going, in my opinion, in this window in September, or else it's going to be kind of I don't want to say over, or else I'm going to be a little bit less confident in the short-sided trade in the Q4. But I still think September's are valid. I still think January's are valid. I still think you have to leave room and be patient, understand how these things develop and how it takes a lot of time, right? Like it doesn't just happen like that. So good luck, have fun. I think this week is make or break, and I still think there's a ton of red flags. Not this week, but this sequence.